Greetings to you and welcome to July month's sales update here in the GTA. Before we dive into the numbers, here is my biggest takeaway this month. The GTA market is becoming tighter, but buyers are still firmly in control. Now let's unpack why. If you only looked at the headlines, you might think the market simply slowed down. Sales were down just under 1%. Average prices softened by about 4.5% compared to last July, and fewer homes came into the market. But when we dig a little deeper, the picture becomes much more interesting. One statistic that stood out is the fact that new listings declined by nearly 18% year over year. That's a significant change. In fact, we are seeing fewer homeowners choosing to list, and as a result, overall inventory has also continued to decline. Normally, when supply shrinks, we would expect prices to start moving higher. So why haven't they? The answer is that demand also has become more measured. Buyers remain cautious. Higher borrowing costs, affordability concerns, and greater choice that we have ever had over the past few years. This continues to give buyers negotiating power and the much needed time. That's why prices remain under some pressure, even while inventory is slowly tightening. The sales to new listings ratio increased again this month to 37.1%, up from 36.5% in June. Now that's still firmly within buyers' market territory, but it's moving in the right direction. Think of it this way. A few months ago, inventory was growing faster than buyers could absorb it. Today, inventory is actually shrinking because fewer new listings are replacing the homes that are selling. That doesn't suddenly create a seller's market, but it does reduce some of the downward pressure we have been experiencing. Another chart worth paying attention to is the average price trend over the past year. Back in January, the GTA average price reached its low point of approximately 973k. Prices then recovered steadily through the spring, peaking in May at just over 1,070,000. July has seen some seasonal cooling, bringing the average price back to just over 1 million. Right now, it stands around 3% above where we started this year. Market is right now adjusting after a strong spring. Now let's talk about what this means if you are thinking of buying. Conditions remain very favorable. With roughly 4.6 months of inventory, buyers still have time to compare properties, negotiate confidently, and avoid making rush decisions. For sellers, however, pricing has become even more important for the desired outcome. Homes that are priced accurately and presented exceptionally well continue to attract strong interest. If a property is overpriced, the buyers are simply moving on to the next one. One of the questions I get asked most often is whether prices are going to fall much further. The honest answer is that no one knows with certainty, but the numbers suggest that the market isn't weakening at the same pace we saw earlier this year. Supply is becoming more and more tighter, inventory is coming down, and that usually provides a more stable foundation for prices over time. Now let us look at how some of our local markets compare. For detached homes, Oakville continues to command the highest median value, followed by Richmond Hill, Vaughan, Markham, and Toronto. Mississauga sits very close to the GTA median at about 1.19 million, while Burlington and Caledon remain firmly in the premium category as well. Looking at condo apartments, Toronto Central continues to lead the region, followed by Markham and Richmond Hill. Oakville and Burlington remain above the GTA median, while Mississauga's median condo price sits at approximately 478k, offering a relatively more affordable entry point for many buyers. These local differences remind us why broad GTA averages only tell part of the story. Every neighborhood and often every property type is following its own path. If you are planning to move or simply wondering what these numbers mean for your own situation, I'd be happy to have that conversation and help you with the very best advice. Thank you for watching, and I'll see you again next month.